QYLD, or the Global Nasdaq 100 Covered Call ETF, has been sort of a polarizing covered call income style ETF that seems like half the dividend investors either hate it or love it. And this is likely due to things like QYLD's dividend payouts or distributions historically have been massive. But with those dividend payouts long-term, investors, even like myself, have been exposed to massive ETF price decay long-term. But in this video specifically, we are not only going to go through QYLD and explain exactly how this ETF works, how it pays so much in dividends every single month, but also we're going to go through my actual position of QYLD. I currently have almost 3,000 shares, and we're going to talk all about that too. But then later on, towards the end of the video, we're going to figure out exactly how many shares of QYLD, or the Nasdaq 100 Covered Call ETF, an investor would potentially need to retire completely free and clear off the massive monthly distributions this ETF is offered. So if you're an income-focused investor and you want to dig into QYLD with us, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first things first, laying down some groundwork. Right here on the Global X ETFs website, we have QYLD, and it says reasons to consider investing into it. So it first off says high income potential. QYLD seeks to generate income through covered call writing, which historically produces higher yields in periods of volatility. And this is because during times of volatility, option premiums get more expensive, and because QYLD is writing covered calls or selling them, this fund has the potential to generate a lot more income during times of volatility. Now, monthly distributions, this is probably one of the main reasons any of us even invested into this thing in the first place, and this is definitely the reason why I bought so much QYLD a while back. It's because the monthly distributions, which to be fair have been pretty massive over the years, and QYLD has made monthly distributions on time for over 10 years running. Now lastly, it says efficient option execution. QYLD writes call options on the Nasdaq 100 index, saving investors the time and potential expense of doing so individually. Now, just a quick note on this, there's lots of other covered call style ETFs out there these days. There's different funds that have different option durations and covered call income style ETFs, just like this one, that might be more management intensive and less management intensive. And what's so awesome about investing into the market these days is it truly feels like there's a product for everyone out there. But some more facts on QYLD. This fund's inception date was 12/11/13, so this covered call style ETF has been around for a very long time, which isn't all that cheap, but also not all that expensive, sort of in the range what you would expect for an ETF that has this level of management. $0.19 billion in net assets under management. This is a massive ETF, and a lot of retirees definitely have their money stuffed away in this one. So now that everyone's on the same page and understands exactly how this ETF works for the most part, looking at some of the negatives of QYLD, and this is one of the main criticisms of this fund, and I'll be honest, this is one of the main reasons I stopped buying QYLD a while back. Now, what I'm talking about here, of course, is the fact that this ETF has decayed in price over and over again for the most part, ongoingly. But to be fair, ever since around October of 2020, QYLD has been slowly trending up a little bit, which has been nice, especially for myself as a shareholder. Now, one of the main reasons and criticisms of covered call style ETFs just like QYLD, and we've talked about this in the past also, because the covered call style overlay strategy basically limits the upside and protects against some of the downside. When QYLD's underlying rips up in price, the covered call overlay will basically kick in and not necessarily allow for all that much upside. But when the market turns bad, turns red, and dips down significantly, although QYLD does have the downside protection to a point, with the covered call overlay, it can only help so much. So the outcome of this a lot of times with these covered call style ETFs, depending on what the exact strategy is that you can see charts like this long term, which I guess the argument for the more income focused investors is you can't look at price return, you have to look at total return, which don't worry, we're going to do that in a second. But just off of price return alone, QYLD's chart is pretty ugly. But now the positive side about this ETF, 11.64% trailing 12-month dividend, and dividends have been paid every single month on time for the last 10 or so years. Now, something to keep in mind also is the fact that QYLD's dividends have been all over the place over the years, and this is due to things like volatility in the market, option premiums, and covered call style ETFs like this are likely not going to pay the same amount to you every single month, although it has been somewhat consistent. But just as of recently, QYLD investors like myself, of course, have expected around 16 to 17 cents per share per month, which still equals roughly 11 or 12% yield trailing 12 months, which honestly I'm not complaining about. Now this brings me into my actual position of QYLD, which I've been holding now for several years. I started buying QYLD maybe 2 or 3 years ago and been stacking up shares ever since, although in the last year or so I have not really added too much to my position. But currently we're sitting at around 2,734 shares of this ETF, which I have an average cost of around $19 or $20 per share. Now that means on paper I'm still down as far as price return goes, but of course over time I've been earning dividends, and we're actually going to check and see what my actual total return is so far in a second here. Now I thought this also might be interesting to some people with the amount of QYLD I currently have across my portfolios. In case you're interested, I'm currently earning around $437.44 if QYLD pays 16 cents on a monthly basis, which like we said is sort of more or less what we can expect these days. So even though I'm down slightly as far as price return goes, I've still been earning around $400 more or less every single month quietly over the last several years, and I've been reinvesting this money into things like realty income, SCHD, and other things across the market, etc. Now next I thought it'd be kind of fun to see exactly how much of total return, this is price return plus dividends included, I'm basically sitting at because I started buying my shares, the majority of my shares of QYLD, back in April of 2022 at an average cost of around $19.90 per share. With the dividends included, I have an average annual total return, again this is just estimated, of around 6 or 7%. So I just wanted to add this in the video and make a point that even though QYLD as far as paper goes, I'm definitely down as far as that said, but with dividends included over the years, I'm still up around 7 or so percent. Not saying that's amazing, not bragging about a 7% average annual total return, but at least I'm not in the red, and of course it could be worse. Now I also thought it'd be fun to see exactly how much an investor would be up or down on QYLD if they started buying it right when this ETF basically started. So if you were to have invested $10,000 into QYLD and reinvested the dividends along the way, you would after 10.5 years have around $20,400 or an average annual total return, this is dividends and price return, of 7.07%. So once again, QYLD does get a lot of hate throughout the markets, and honestly I don't really get why. This ETF 100% has not performed the best across the entire class of covered call style ETFs or the entire market, but the ETF is still in the green overall. And even if you spent the dividends along the way, you would still be up around 5% on average per year. But lastly, just like the title of the video says, we are going to find out exactly how much an investor would need to invest into QYLD specifically in order to retire completely free and clear off the dividends. Now it says right here the average monthly expenses for one person, this was in 2022, so again these numbers are just going to be estimated. We're just having fun with this. It's sitting around $3,700 or so per month, or around $44,000 per year. And I know some of you guys watching this video expenses might be much less or much more, so definitely go through the math for yourself and have some fun with it. But if your expenses are around $3,600, $3,700 per month, and if QYLD paid on average around 16 cents per share per month, that means that in theory an investor would need around 23,000 shares of QYLD, which currently cost around $17.80. So that means an investor would potentially need to invest around $407,000 into QYLD in order to completely retire free and clear off the dividends. But when it comes to QYLD, the global NASDAQ 100 covered call ETF, I lastly want to hear from you guys down below. I want to know if as of right now you're holding any shares of QYLD across your portfolios, and if so, how many shares do you have as of right now? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.